Welcome back, folks. Thank you all for joining. Today we're going to be taking a look at Berkshire Hathaway. I'm just going to do a little bit of their quarterly report, mostly going to be focusing on the 13F filing that they put out here in the last couple of days, depending on when you're watching this video. It's going to be the Q1 2022 13F filings. It's going to show all the U.S. holdings in Berkshire Hathaway. Now, remember that just because, Berkshire buys something, it's not necessarily Warren Buffett specifically. It might be one of the lieutenants, or it might be Charlie or whoever else works at the company, because he actually allocates capital to other people that are underneath him. It's not just him making every single decision. So with that being said, let's hop in today's video. So the first thing that I really wanted to point out was if you just look here at the $35 billion. So you have $35 billion in cash or cash equivalents on the insurance and other side. And you can clearly see that's down about $50 billion. You're going to see why here in a moment, why it's down so much. Then obviously the railroad side is doing pretty well. But you can see here, we got a little bit of a gain in terms of our assets and our total assets. So I'm not too concerned with that. I think that Berkshire Hathaway as a whole, they operate very, very well, and they're going to, allocate that capital very well. Now, just taking a look at their liability sides, there's nothing crazy that popped out to me as far as their liabilities. These all just seem, rather normal. So no huge jumps here, no crazy loans or anything like that taken out. But again, it's Berkshire Hathaway. What are you really expecting? Now, as you can see here, this is the consolidated statement of earnings. You're going to see that their revenues have grown somewhat year over year. Not really that shocking if you just think about the state of the world back in 2021, at least Q1 2021. Again, they do have to report their investment paper losses and paper gains as, part of their net income statement. And it makes it a lot harder as far as, trying to get exactly what they did and how they did it. But I think that overall, nothing crazy big came out of this year, or at least this quarter. You can see that sales and service revenues are up, insurance premiums earned are up. Those are some great numbers that they have, and obviously the business is just still growing as far as the sales goes. So again, nothing crazy happened. Really happy with the first quarter. There was, it's Berkshire Hathaway. So what are you really expecting as far as, how they perform? It's always going to be slow and steady, the turtle versus the hare kind of thing. So nothing crazy there. So this is the last one that I want to get to as far as our quarterly report goes. I'm not going to really go through anything else besides this, but the cash flow statement is really where I want to focus. So this is really one of those things where this is kind of the bread and butter of understanding where their business is at this time. And it's kind of interesting. You can see here on the cash flows from investing activities, you had $51 billion flow out of Berkshire Hathaway. They bought $51 billion worth of stock, or just equity securities, really is what they're listing it under. And then obviously they sold some, and you'll see that here in a second once we go to the 13F. They actually sold some of their treasury bills here, and they also purchased some as well. So again, they're kind of gearing up for making this that fortress and, manning the walls and building the castle even bigger. And again, you're going to see why here in a moment. The 13F filing was huge. They did a lot of buying this last quarter. It's kind of surprising to think about where we were last year and even really the year before. They didn't do so much buying, but $50 billion in a quarter is quite a lot. So let's hop on over to the 13F filing. So the 13F filing came out, again, it came out a couple days ago, if not a day ago, depending on when you're watching this. And one of the things that I really wanted to note was just really what they bought. So they had Occidental Petroleum. He had mentioned this as a sort of, currently what they had and what they were buying. A lot of this stuff came out in the news as they did their annual meeting, so not really going to be too shocking as far as what you see. I think it's more so the moves of companies that they already had and what they sold that I think is more interesting. So they bought Occidental. One of the interesting things I thought was they bought Viacom CBS, and I didn't expect them to get into sort of this streaming play, but again, it might not be Warren. It might be one of the people underneath him. And I mean, you look at Viacom and HP in terms of their PE and just, they look like value stocks as far as, what people consider that value stocks. The other one that they bought was Markel Corporation. A lot of people in the value investor space have been really talking about this a lot. It's almost like a mini Berkshire Hathaway. A lot of people consider it. They actually were at the annual meeting and they gave some talks. I think New Money and Investing with Tom went to that. I saw a couple pictures from it. It looked awesome. I haven't gotten a chance to listen to it yet. again, he sold he bought Citigroup. He got back into one of the big banks. He also bought Ally Bank and then Celanese Corporation and McKinsey. Those are kind of like the buys that they've done. And I don't think that the Citibank and Ally Bank purchases are really anything shocking. And again, it's not just Warren. So it's possible that these were bought in a couple different portfolios, not just in, Warren Buffett's portfolio. As far as the sales go, they had AbbVie, Bristol Myers Squibb, and Wells Fargo. Those are kind of the three big dogs, and I'm surprised that they got rid of them. But it's not shocking in terms of if they see something that we don't. Maybe there was we've had some appreciation in those companies anyways, so it's possible that they've fallen out of the range of holding or buying more, and they want to take that capital and put it somewhere else. Wells Fargo, he finally got out of this position. Not really that shocking. I think out of all the banks, I don't think Wells Fargo falls on his most favorite bank. And I keep saying his when it's really just Berkshire Hathaway's as a whole. Verizon Communications, a lot of value investors were scratching their head thinking, why did Berkshire Hathaway get into this? I'm also shocked that they kept some of the shares rather than just getting rid of all of it. I mean, they reduced their position by 99.13%. It's possible, though, they started doing it towards the end of the quarter, so they might have continued to sell it off into Q2. So the cutoff is March 31st, but it's possible that the sell-off kept happening into Q2. So we'll have to see on the next quarterly report what that looks like. Royalty Farm has been reduced, Store Capital, and Kroger. The Kroger one was kind of surprising given that, they own a lot of grocery stores, they own a lot of brands. We'll have to see exactly what is in store for, I guess the inflationary plays, but I would almost guess that Kroger got sold off just a tad bit because they wanted to use that capital for other pieces of their business or other investments that they saw. As far as any changes beyond that, nothing else got sold off. You can see the list here. I'll just pause it. You just pause the video for a second if you want to see kind of the list of what hasn't been sold off. They're fine holding Amazon, fine holding Visa. Snowflake, for some reason, they're fine holding. Nothing crazy there. Again, he's going to hold these companies and they're going to keep holding them. And that's kind of the goal of Berkshire Hathaway, is just holding them until they go nowhere, just into oblivion. They'll just hold them to the end of time, till judgment day is, I think, what he says. Apple stock, they did add a little bit to that, and that is something that Warren actually had mentioned. They bought, I think Warren himself bought $600 million on the dip back in, I want to say it was March or February, the dip then, and then it kind of shot back up after a couple of days, so he stopped buying. Maybe with some, recent weakness that we've seen in Apple, we might see more of that buyback into the company and keep adding the shares. They actually did, I think it was some point in 2020, they had actually reduced part of their stake, but because of the appreciation from 2020 till now, Berkshire Hathaway is still in the green on this. They didn't sell off too much. It was a small amount. So not really shocking there. They did up their holdings here in Liberty Media, Chevron, Activision Blizzard, Floor & Decker Holdings. And you can see that here. This is, 264%, 316%, 338%, and 466%. These are, things that they believe in. The one that I want to talk about the most is Chevron. He's been buying, and I keep saying it's the whole company. Berkshire keeps buying Chevron, and they've been buying Chevron over the last couple of quarters. And clearly they see some level of, this is a value company, and if we keep buying into it as oil prices keep going up, I think that the whole Russia-Ukraine situation has really shifted the oil market and really what he sees and what the rest of Berkshire Hathaway sees. So I wouldn't be surprised if it's not just in Warren's, but if it's also in, some of the other people's portfolios within Berkshire Hathaway as well. Activision Blizzard, one of the other managers at Berkshire, started buying pre-acquisition or pre-merger pre-acquisition announcement, and then Warren Buffett himself saw this as a workout. We talked about this in the video. I'll link it wherever the card is. I don't know which side it's going to end up being on, but wherever the card is, click on that. I did a video on Activision Blizzard. I do think that there's an opportunity there, and clearly Warren saw it. They bought into it pretty big, so not really that surprising as far as the Activision Blizzard buy. But I really do like the opportunity from Activision Blizzard. I think you can get it $25, $26. It's about 25, 26%. They expect it to close in 2023 or fiscal year 2023. So from July 2022 till June 2023 is when they expect the deal to close. So look out for that. I might add that. Anything below 75, I'm really, really, really interested. So other than that, there wasn't anything crazy. I will do this for you all real quick. Just to show you the change in percent as far as the value goes. As far as things that they've added, you know, T-Mobile went up 10%, American Express went up 14%. Obviously, you had a bunch of companies go up that they had added to. Everything else, you know, there's nothing crazy on here that they have added to or that they've maintained that has gone up or gone down a lot. You can clearly see that they've had some of the companies go down. They've added a tiny bit here and there. Snowflake's gone down 32%. They got in pre-IPO, so you know they're still in the green on this. A lot of these companies, they're really doing well. So anyways, y'all, let me know what you think about the 13F filings. I'm going to be going through a bunch of other ones as we kind of go through these videos. So let me know what you think down below. I do think there's some crazy opportunities out there, and I honestly would not be surprised if we see some more I don't know, like more opportunities come up here in the next couple of months. So keep your eyes peeled when I keep putting out videos for you all. Thank you guys. Have a great day. Goodbye.